typically the use case for venture or growth debt is growth. So if you're lending to a loss-making company, you're wanting to see the funds being utilized for growth. Yeah, they're fairly interchangeably, but I'd say that there's probably a bit more of a movement towards growth debt, and it sometimes sounds less risky. So I think that's probably where you'll see more. In terms of terms, look, I think there's more and more entrants coming into the market all the time. There's such a growing awareness of the asset class. I think that some of the difficulties in being able to access venture capital funding has meant that, a lot of venture and growth debt funds have sort of stepped up. And as a result of that, there's a very, very broad array of structures available. So, right now you can source, 3, 4 year, 5 year bullet facilities, similar to sort of a uni-charge facility. Typically those types of facilities are only available in sort of the mid and large cap debt markets. Those are sort of coming in now. So there's number of providers doing that. Number of providers looking at, covenant-lite or no covenant loans. We've had one at the moment where it was a subordinated, no financial covenant transaction with no equity kicker as well. And I think the funds have become much more pragmatic around sort of, equity kickers and warrants, for example. So some realize that, if you're about to raise an equity round in the next 6 to 12 months, having a warrant that's sort of being put on the cap table that references the last valuation might be sort of a line in the sand that's unhelpful. So they might be looking at a percentage of proceeds or just a nominal, like a fixed exit fee. If you look at sort of the US market, which is probably about 5 years ahead of the UK, there's, most facilities, I'd say 50% of that market is sort of, a warrantless market. It's just high yield, senior secured debt. And the rest are, effectively sort of covenant-lite loans with an equity component. The funds are being a lot more commercial these days with the warrants and the requirements. It's not just here you go, here's a 4-year loan with a 12-month capital repayment holiday, 2 covenants, no matter what the business is. There's a little bit more structuring, and I suppose probably more borrower friendly terms that are coming into the market. So it's a good time to be to be a borrower.